Hello everybody, this is Raghee Horner, and thank you for joining me for yet another one of our Interbank FX presentations. We're going to be talking about setting up entries and exits. I wanted to expand on the previous webinar where I talked about the one-click feature on the platform. So, and with that, I wanted to also talk about entries and exits and order placement and things like that. You know, and a lot of times, regardless of what the chosen topic is, sometimes the current market will also dictate what it is that we're going to be talking about as well. So I would be absolutely a fool to not take advantage of this time here with you traders to talk about what we have seen, really historical price action. I got to tell you, I've been at this in either the commodities, equities, and of course the foreign exchange realm is trading, you know, for 2 decades. And while I wasn't trading during the '87 crash, I was in 10th grade, I was witness to the internet bubble and a lot of the changes from the pits to the electronic markets. I mean, basically, you know, entirely through the '90s, I was becoming an active trader and very engaged with small order execution systems and the day trading boom and directing your own order flow and really everything that we've kind of come to take advantage, to really take for granted and can take advantage of now in the markets. Even the evolution of Forex here in the U.S., you know, from what was a, you know, roll your eye, oh my gosh, you're trading that wild, wild west market, to where my equities buddies are calling me up and sending me emails and instant messaging me during the day saying, hey, what do you see happening in the dollar yen and euro yen? I gotta know, you know, because trading from this perch of foreign exchange is a very different view, right, of the markets. And having traded the other markets, you know, I can say with a lot of confidence, it's not a matter of what's better or best. It's just understanding that in the end, all that we really are trading is psychology, and nothing is more evident of that than what we've seen this week. I mean, absolute craziness this week. But that's psychology, right? That is absolutely psychology. So let's jump on over to the charts. One thing that I do want to make sure that everybody has is just a good idea of what the new version of the Interbank FX Trader 4 platform is, okay, because that's really part and parcel with what I'm going to show you here today. Okay, and I get to show you some other cool things here today too. So today's kind of going to be a grab bag of things, including order execution and trades that I'm in and all sorts of stuff. So I guess you can say anytime you see setting up entries and exits, it's just my effort to say we're going to talk about the markets today, and that's just the way I like it. So of course, if you do have any questions, that's what that question text box is for. Please feel free to take advantage of it, and I will do my best to answer your questions. Of course, it would be greatly appreciated if we stay on topic. I know we're probably going to jump around topics, but if you stay on topic, it's going to make my giving you a coherent answer that much easier. Okay? So again, my name is Raghee Horner. I'm the Chief Currency Analyst at Interbank FX. You can check out my daily analysis at a number of places, but where I hang my hat is www.dailyforextradingedge.com. I thank you, Johnny, for your kind comment. And I try to put in at least 1 or 2 updates per day and kind of put in the trade idea that I'm running with, and in terms of some of what I spoke about in today's market analysis. What I'll do is, and by the way, Johnny, if I don't get to answer your question today, please leave me a comment. And by the way, that goes for anybody here in the room. If you've got a question about anything I'm talking about in the webinar or anything you see on the dailyforextradingedge.com website, leave a comment, because I do check those a couple times a day, and I think Johnny will attest. I'll give you an answer right there at the site. So just leave a comment or question there, and we can begin the discussion. Okay? So I'll try to get to that later towards the end of the webinar, Johnny, because I know if I start talking about Forex Market Pulse and all that kind of stuff, I will go off on a half-hour tangent. And any of you who have been here in the room for the past webinars knows how I am about that. All right, so I'm very happy that we seem to be having full audio and video here today. I know that's been a problem for a couple of the webinars, and I appreciate your patience with me and with technology. Okay. All right, so what version of the MT4 platform, the Interbank FX Trader 4 platform, am I using? You can see right here, it is version 4.0. It's MetaTrader 4. It's the build 402, which was released basically mid-May. So if you have not downloaded the new version, I know I've been mentioning this for the last few webinars, but this is not a version that's going to automatically be updated. From what I know, you're going to have to go download the new version. We worked in close cooperation with a company called MT4I, and they put some awesomely, wickedly cool gadgets on this version of the platform, and it's just it's like MetaTrader Plus. It's just amazing what you can do now with expert advisors and just the evolution of that. Okay, so make sure you've got that version, and just to give you an idea of what I'm running on these charts. All right, that's always helpful. Of course, as always, I've got the 34 EMA wave running on the charts. And my grab candles. Don't trade without them. I never trade without them. The other thing that I want to mention is that if you want to put these tools on your charts, the cool thing is now all you actually really need to do is open up your navigator window. Now I usually close mine until I need it, because I will use every square inch of monitor real estate that I can get for my charts. So until I need the navigator, it's not something I go to consistently. I don't really need the list of quotes either, because I can type them in individually on each chart. So every square inch of my Interbank FX Trader 4 platform that I can dedicate to my charts, that's exactly what I'm going to do. Okay, so if you go to View and then go to Navigator, you can bring this tool up, and if you go down to the custom indicators, you'll see that the IBFX grab, all three of them are here. Now it is 3 separate custom indicators, and you've got to drop all 3 on the chart. Okay, but once you do, you'll have not only the grab color-coded candles, but you'll have the 34 EMA wave, the green, red, and the blue lines on your chart as well. Okay. Now the other 2 moving averages that you will commonly see on my charts in white are the white thinner line is the 20 period simple, and the white thicker line is the 200 period simple. Okay. The other tool that I'm using is the Power Stats tool, which you'll see here, Auto Chartist Power Stats, also under the custom indicators. And if you drag and drop that, what you will get on the 15, 30, 60, 240, and daily time frames is an overlay of the Auto Chartist plugin for price movement ranges and for each pair. What it will essentially turn into is support and resistance project it out, forecast it out for the next 15, 30, 60, 240, and daily. And it's just another very interesting, very unique way. I know of no other tool that does this, of projecting support and resistance levels. And it's based upon historical price action, market volatility, okay? And it is a fantastic tool to help with your timing and to help you understand what the potential price movement can be given a certain amount of time. Again, it's a very unusual, very powerful way of determining support and resistance. Again, one that I've never seen in any other format. So that's what I've got running there. The other tool that you're going to want to put on your chart, if you already don't have it on there, is the mini terminal. Now, you can actually access the terminal a couple different ways, and I am actually running my demo account here, which may present some problems because I've actually got some trades running on another computer, my live trades, so I'll have to possibly restart this and see if I can't get the mini terminal as well, so we could talk about order entry, but we could do that regardless. But I was hoping to do that today. I might have to push it off for another time, but if anybody does have any questions about the mini terminal, I'll be happy to walk you through it. All right, and then the other tool that I do want to share with you, and I won't spend a lot of time on it, we'll get right into the market discussion here, is the IBFX link. And this will allow you to check out not just news, okay, economic calendar, Twitter, okay, my Twitter feed, Alex Douglas from Interbank FX Australia, his Twitter feed, and also the Interbank FX, the main Twitter feed, are all there. All my tweets during the day, all Alex's tweets during the day are all listed here. Okay. I will, for the most part, post videos and commentary and links to other articles that I'm writing. And every now and then, I will, yes, tweet the baby monkey riding backwards on a pig. And if you haven't checked out baby monkey riding backwards on a pig, this is absolutely the week to do it. Don't do it now, because it will absolutely steal you away from me. You will not return, and you will absolutely have the baby monkey riding backwards on a pig song. Yes, there is a song. So every now and then you do need a little bit of a comedic break, and after you've been trading the markets as long as I have, you learn not to take yourself or the markets all that seriously. They will eat you alive if you do. Okay? All right. So you can also access Dashboard, the Daily Trading Edge, your Interbank FX account, training videos and articles and webinars, as well as the online version of the AutoChartist PRS right here through the link. Okay, so again, right from inside the platform, you can get access to all these. Also, last thing, I promise, you can now actually, and let me go ahead and pull this up, because this just went live, and it is live on the home page, ibfx.com. But let me go ahead and show you this. And that is the website called IBFX Connect. I don't know how many of you have been over there yet. It's basically a social trading website. It is wickedly cool, because what you can do now is see the trades and commentary and ideas of not just live but demo traders as well. You can connect your account to the IBFX Connect website, which I'm going to bring up right now. And what this platform will do also, once you've linked into it, you know, it's Facebook-ish in that it's social and you can follow particular people and see what they've done. You can see some of my recent, you know, trades, what I've done, and these are real money trades. Right? They'll let you know whether the account is live or not. So they'll show some recent real money trades. Okay, I've linked my account, so you can check that out. And then you can also check out some of the people who are just also members, and some people are just killing it in the market right now. Anokwek, that's a brand new name up on the leaderboard. You can see whether they're trading live or demo account, and then you can do this for your own account as well. You can actually have performance and stats, so you can study your own trading habits and performance and break it down in a number of ways right through the website. What pairs you're trading, what kind of success you've had with them. You know, maybe you're spending too much time on one pair. Maybe you're not spending enough time on a pair that you're very good at trading. You know, this is going to help you determine. You know, I had a friend of mine who was trading a lot of different pairs, which I think is a good habit, but she found out that she was just nailing it in pound sterling related pairs. And she only knew that because she'd gone through manually and looked at all her trades and done all the math and sat down with it over about 2 or 3 weekends to determine this. And she took one look at this feature and said, oh my gosh, this would have saved me literally probably 40 hours of sitting down and rifling through trades to show what this performance and stats dashboard shows in a glimpse. What type of success, what type of time you're spending on different pairs, and basically she calculated not even as much as what's shown here, but she calculated a lot of the same type of data, but again manually, and here it's updated for you. So that is IBFX Connect. Very cool, brand new. I hope you guys will join us here. Okay. All right, so a couple questions popped up here, and we will tackle those right now. We'll talk about entries and setups, placing orders, all that good stuff. What I'm going to do while I'm tackling some questions here is restart my platform. So the first question here is, or a comment from Cesar, who says the new platform is great, and I absolutely echo that sentiment. It is awesome. The time frame indicators, Dane, I hope you know now how to activate those with the navigator and going to the AutoChartist Power Stats. Those are awesome to have. In fact, I keep them on all my charts. Every single time frame that I have that they'll work on, 15, 30, 60, 240 daily, I actually have them running. So big fan of those. Excellent way to find support and resistance. There's a template for the okay, great. I'm glad about that. There's a template for that? Okay, super. As far as Heiken Ashi, you know, I probably could not even begin to speak intelligently about Heiken Ashi charts, to be quite frank. I don't use them. So when I talk about speaking intelligently, until I put some real money behind them, I'm just not going to comment, because you know, I don't want to steer you guys in the wrong direction, obviously. In that most people feel that Heiken Ashi are a better candlestick. That's probably where the resemblances between my grab and Heiken Ashi begin and end. I think an average Japanese candlestick bar is excellent. It's a better footprint visually than a Western bar chart. But candlestick charts, to me, while they're great, I think the next step that I've taken is trying to determine sentiment and momentum with my candlesticks. And what I've basically done it's probably in the same spirit of the Heikinashi, because I think that from what I understand about Heikinashi, the backbone of it is being able to read trends more easily. And because I have the wave, I'm not really reliant on my candlesticks to necessarily reveal the trend, but I will depend on my candlesticks to reveal the momentum and the sentiment. And my candle color coding is based upon where the candle closes in respect to the 34 EMA high and the 34 EMA low. So as you can see here, closes above the 34 EMA high, plot green. But I still keep the classic Japanese candlestick interpretation in that a down close in any color is just a darker shade of that color. And it would be very helpful if I actually showed you the chart, wouldn't it? So when you're looking at, for example, let me blow this chart up. This was a chart that I actually was talking about this week on an earlier webinar over at FX Street. Somebody had asked me about the Euro Kiwi. Not a pair that I trade very often, but it actually ended up being a fantastic view of what I think is so great about grab candles. Because when you have the steady flow of the red grab candles, there's bearish sentiment, bearish momentum, and a succession of grab candles that are red will typically result in a downtrend. A succession of grab candles that are green will typically result in an uptrend. And when you have a lot of blue grab candles, as you can see here on the left side of the chart, this actually is a 4-hour Euro New Zealand dollar. You can see there's a lot of neutral sentiment, no bullish or bearish momentum really. So it's just another way of visually identifying things that you probably could do on your own with trend lines and other moving averages, but I think this is just a much quicker, more visual way for me to scan across literally dozens of charts very quickly. Okay, and I trust these. I trust this tool. It's been something that I've used long enough where at a glance I can make decisions about the clarity of the market trend, the clarity of the market psychology. The cool thing about some of these candles here, especially this very quick shift in the market trend, is blue candles are not enough to give you insight into potential shifts in trends, but what they will tell you is the shift in momentum, and therefore also the cumulative sentiment that got us there. The break of the wave is what triggers my questioning the validity of the previous trend. And this is just a perfect example of just market trends, at least I'd say good examples of 3 out of 4 market trends. Accumulation back here during the months, mid-June to about end of June. The downtrend, the mark down, and then the mark up. I mean, these are just really textbook examples. It's just a perfect example of, to me, the visual nature of the grab candles. As far as the grab candles go, these are just my, I won't say invention, creation, I guess you could say. It's really just a visual marker for something you could determine on your own as to whether a candle closed above the 34 EMA high or below the 34 EMA low or in between those lines. It is not proprietary. However, Interbank FX has created a version that's a self-installer, and it is included on their version of the IBFX4 platform, which makes it hugely accessible, very easy to access. I don't know of other platforms, but I will say that for those of you that are curious, I imagine you could go hire a programmer to do that. There's nothing, I don't keep any secrets about what it is or why it plots the colors that it plots. So the only other platform that I know it runs on is my programmer, and I use eSignal as well. And my programmer for eSignal did create some grab candle plug-in. for me on e-signal. So the only two platforms that I know you could use it on are the MT4 platform. And again, the Interbank FX version has it built in. And then, like I said, my programmer created a plugin for me on e-signal. So those are the only charts that I know of, and really, frankly, because those are the only charts that I use. Okay. All right. In terms of recording these sessions, yes, they are absolutely recorded, and thank you for reminding me. You can access the recordings at youtube.com/Interbank FX videos. Okay. Actually, now that I think about it, you can also access them to the education link at dailyforextradingedge.com. Okay. All right. So again, if there are any questions about a particular pair or a particular time frame of a pair, let me know, and I'll be happy to analyze that. Let's just start talking about some setups and entries, and talk about what it is that I look for when I'm trading the market. You guys know that the first thing that I always want to start with, and this is going to be in order of the way I process all the information. The first thing I want to do, let's take a look at the cable. We'll take a look at the cable because I had an update on the cable over at the Daily Forex Trading Edge. On, when was that? Maybe the day before yesterday? Trying to remember when that was. Let's see, I talked about the cable. There it is. One more fade opportunity before the cable drops was the question that I posed. And what I was considering was perhaps on the dollar weakness, on a dollar drop, that we could see another rally to the resistance area of the weekly. You know, when I stepped back and looked at the weekly chart, there was a fairly consistent area in which the sellers were just Donkey Konging this market. The pound sterling has simply not been able to get out of its own way. So I thought, well, if we enter this area, I sure would be interested in potentially selling into momentum as prices entered this zone of selling pressure. But then I also was open to the possibility that, hey, we may not rally that much. We just might sell off in the near term. And so I presented the 60-minute setup as a potential short sell trigger based upon it being a swing setup following the intraday downtrend. Okay, so that was this chart down here. Remember that there's been a lot of civil unrest in England. Okay, and obviously that was a near-term factor, and I talked about that. We talked about a higher degree of volatility, so we had to accept that if we were going to trade anything against the pound sterling. And the pound sterling, generally speaking, is, I think, a fairly volatile pair as it is. Like I call the cable the drama queen. So this was the setup that I talked about on the 9th. And again, the trigger was going to be up into this area. What was nice about having the power stats overlaid on this chart was I had a pretty good idea of where I could get into reaching some selling pressure over the next 24 hours. That was really nice, and that was basically overlapping with the 20-period simple moving average. This type of overlap of different technical indicators is very powerful for me because it kind of clusters up, identifies, this cluster of indicators, or in this case the pair, basically to me strengthens and identifies levels at which market participants might be making decisions about what they want to do. And in the context of a weak market, in the context of a clear directional bias, I've always found it easier to position myself in shorts at resistance in bearish directional bias markets and position myself at support, being long, in bullish directional bias. So how is it that I determine directional bias? First step of any trade, start with that daily. Now, the cable, in terms of directional bias, is far from clear. This is a market that was somewhat bullish, recently started to turn over, become bearish, and most recently has become neutral. So this is a market that is just really not clear in terms of its directional bias. Also, another pair that I think is eating traders up alive, unless they're staying very nimble, is the euro. Take a look at this euro daily chart. Is there a clear psychology here? Other than absolutely volatile and crazy. You know? As the kid across the street says, that's just crazy pants. This is a crazy pants market right here. Absolutely. Open up the Dramamine, take a few, you're going to need it, right? Why is the daily euro US dollar crazy pants? Well, we could probably spend the rest of the session discussing the fundamental reasons why, the intra-market reasons why, and so forth. But, you know, sticking with the price action, being a chartist, believing that what's happening fundamentally and in the news is discounted into price and therefore reflected on the chart, I don't need to be a genius and a fundamental expert to even extrapolate from this that this is absolutely just a volatile, sideways, confused marketplace with a lot of conflicting and basically colliding pieces of data moving it or not moving it in this situation. Where is there clarity? You know, maybe one of the first trade selection filters in your process, and this is very much related to setups, because you know what's interesting to me? A lot of times traders get into setups and they want to know, give me the steps, 1, 2, 3. Identify this moving average, and if price cross is here, or if this reading is there. They just want these templates. They want step by step. They want a recipe. And you and I both know great cooks might have a general idea of how much chicken and carrot and onion and this and that goes into a great coco bun. But there's a feel to it, right? So in terms of that feel, yeah, you can give me a recipe. That's going to be some general guidelines. Chicken, carrot, onion, you know, whatever, right? But salt and pepper and seasoning, all that's where the craft comes in, and that's what trading is. You know, if it was easy as following step by step, we'd be making microwave brownies, right? We'd be making shake and bake chicken, not coco bun. So I'm hungry. I must be, because I'm talking about food. So obviously I have not eaten enough. In fact, I think I've been forgetting to eat because the kind of price action we've been seeing. Literally, I've just been holed up in my trading office here in my room. I haven't come out. Thank God I've showered, but that's about the extent of it. I think I've probably forgotten to eat. I'm thinking about nothing but food right now. So let me stay focused. Market clarity. Where am I going to find it? Well, I'm going to keep going through the daily time frames until I find a chart that has clear directional bias. In other words, an organized succession of red or green or even blue for neutral markets, but not what we saw on the euro US dollar, certainly not what we saw on the cable. A little bit more organization here. We can see this blue neutral candle courtesy of, yes, the Bank of Japan and their futile effort to weaken the currency. I'm certainly not scoffing their strife. I know that a very, some people will say overvalued. You know, what does that mean? You know, overbought, overvalued, undervalued, oversold. those are really meaningless words to me because it all has to be taken within the context of the price action and the global economy. And right now, the dollar yen and the dollar Swissy are appreciating, continuing to increase in value simply because that's where traders feel safe putting their money. I don't need to know all the details of, even though I talked about it a little bit here today, I don't really need to know all the details of the Swiss National Bank, the SNB, and what it means to peg a currency to the euro. I don't need to know as to the degree to which it may or may not be allowed. I don't need to know any of that. All I need to know is that if the vice president of the SNB, and his name eludes me right now, Thomas Jordan? Yes, if Thomas Jordan comes out and talks about peg, the market hears nothing else. He said peg, or he said fixed exchange rate, and that was it. We can see the rocket ship take off on the dollar Swissy as the Swissy lost ground against the dollar. The dollar really hasn't gone anywhere, by the way. If any of you have looked at a dollar index chart, it's just moving back and forth within about 30 tick range. It's not really going anywhere. It's not in a trend. In fact, imagine what we just saw on the euro-US dollar, that back and forth slop. That is what we're seeing at the bottom of a downtrend on the dollar index. In fact, the dollar index more or less kind of looks like the euro-US dollar upside down. This kind of back and forth junk. Imagine this chart upside down, and that's what the dollar index essentially looks like. As far as the announcement, some of this is experience, but some of this is also admittedly understanding why they were discussing a peg. Okay, you can step back and say, you know what, I know this means something different. This wasn't like an intervention like what they tried last week with interest rates. They aren't selling franc in order to weaken the currency the way the Bank of Japan has been. Okay, they flat out came out and said that we have a temporary fixed exchange rate and fix it to the euro. Their hope is to stabilize the currency against, in this case, specifically the euro. Okay, if you talk to economists, they'll talk about how it's a way you can control inflation. Okay, for the Swiss, I think the main issue is involving the balance of trade. Okay, trade deficits will actually increase the demand for foreign currency and simultaneously weaken the domestic currency, which is exactly what the Swiss want. Okay, for the franc. I talked about it today on the update that I posted on the Daily Trading Edge, just so when people start throwing around words like pegged and fixed exchange rate, you know exactly what they're talking about, why the Swiss are even throwing this out. The funny thing of it is, and I wrapped up the discussion on the site with this, is that, is it realistic? And my opinion is no. Probably is not. But the threat of it, the discussion of it, is certainly enough to shake traders out of their, say, short positions on the dollar Swissy or the euro Swissy. This was just a short squeeze that went on today, and short squeezes don't necessarily last just one session, but this was a short squeeze. This is basically the SNB trying to prevent further positions based upon an expectation of more franc strength, and also kind of deter new lows. We see how well that has worked for the Bank of Japan. It is way easier, I think, to talk up a weak currency than it is to talk down a strong one, especially in this global environment with what's going on, the fear and the uncertainty. You know, the Dow is a perfect example of the fear and uncertainty right now. Yes, we're up one day, down. I mean, what could be more reflective of just out-and-out confusion than the nonsense we have seen in the Dow Industrial Average this week? Okay. In fact, if you want to know why I talk about the Dow and crude and things like that, as well, some futures contracts, when I'm discussing Forex, is consider that we're trading the stock of a country, and the most commonly used goods and the most commonly followed commodities that affect the relationship between other currencies, like the dollar index, and understanding whether the dollar index is weak or strong, understanding the value of crude and how that affects the market. I talked about that today. If you go to the Daily Forex Trading Edge and click on the Market Analysis tab, you can see that I wrote an update called Crude Oil's Role in Your Forex Trading Analysis. And I actually, of course, go off in a mid-article tangent and discuss the Dow a little bit as well. Okay? So how long, and I think it's a great question you have there, David, how long will, as you put it, the trader's disposition be changed? And that's always the question, right? During the Bank of Japan intervention, how long can they keep selling yen? How long can traders really consider that move to be weakening the yen when in fact all they're doing is increasing supply, but once demand catches back up with it, it won't matter anymore. They can't keep selling yen forever. When and why would demand catch up with the yen? Exactly what we've seen over the past basically 3 weeks in equities. Exactly what we've seen in the ascension of gold to $1,800 an ounce. Okay? What could make people feel that the supply or the peg in this the supply in the Bank of Japan that they're flooding the market with, but in terms of the Swissy, the perception that basically saber rattling today, right? They talked up a potential scenario, and that scenario was scary enough to shorts in the dollar Swissy and the euro Swissy to make them cover, get stopped out, whatever, and get people weakening the franc and therefore pushing the dollar Swissy, pushing the euro Swissy higher. Okay? So in terms of the setups here, traders who feel that no, the SNB is not going to peg. I don't believe they're going to. What's more realistic? What are they more likely to do in the near term? There's a lot of talk that they'll probably impose some sort of tax on foreign deposits. And if they do that, not only will you probably have some outflows, so people will in that regard be selling franc and getting out of there, you'll probably slow additional inflows. In other words, no more franc buying, and in fact maybe a little bit of franc selling because of an imposed tax on those foreign deposits. That's probably more realistic. And again, just the threat of that would probably keep people away. So is the SNB really looking to reverse the downtrend of the franc? I think they're more realistic than that. They're probably just hoping to prevent brand new lows. I think they would be completely content with a sideways range even at these levels, as long as we're not getting pressured to new lows. Okay, because reversing the trend with those two, if they were actually going to do either one of those two, I don't know that it would turn this downtrend into an uptrend. I think the people who have franc will continue to hold them for the most part, and that alone will keep likely the trend or the weakness in place, maybe transition it into a wide volatile sideways range at the bottom of the trend. But I'm not expecting a reversal in any way. In fact, when you look at the price action, traders discounted what they know to be possible. Imposing a tax, franc euro peg. Until something actually happens now, the SNB showed their hand. So unless they're going to do something different, my feeling is that the trend will resume. Why do I feel the trend will resume? If I've got a downtrend, I'm going to assume that selling pressure is going to continue to keep the price from rising any higher. Where that selling pressure will come in, well, that's what the SNB was able to really affect with such a dramatic statement, and then therefore they got the dramatic move higher. At these heights, yeah, I think the Frank's pretty exhausted, and there's going to be no more fuel in the tank, because fundamentally, again, like I said, they showed their hand. All right. So what's the setup here? Well, we start off with a daily directional bias. The time frame selection is pretty easy, and I've talked about this in a ton of other discussions, but I think it's worth mentioning again here. Your first filter can certainly be in a sideways market, like what we saw in the cable and on the Euro-US dollar, often called the fiber, when there is no clear bullish or bearish directional bias. That directional bias is really going to be your initial filter, because a lot of traders determine that when there is a sideways directional bias, they're just going to move on. Thank you very much. Too much confusion, too much volatility, a lack of organized sentiment and momentum. I'll come back when you make up your mind. If there's a bullish directional bias, if prices are actually climbing, like we had seen on the Kiwi up until this, on the dollar Kiwi, or Kiwi US dollar, up until the recent pullback, if we're talking about up to about this point here, okay, bullish directional bias, what I will then do, of course, is try to trend follow, okay? Since I'm trading across the 30, 50, 60, 240, and daily time frames, in an uptrending environment, what I'm going to focus on is getting long at support when I can. But, you know, there's going to be those times when I'll be able to identify weakness, a correction, maybe a slightly prolonged correction, not a reversal, big difference, but a correction in the market, and I might see that there's weakness, right, in this uptrend. That doesn't mean I need to sit on my hands. What I'll then do is focus on my short-term time frames. And my short-term time frames are the 5, the 15, and the 30-minute time frames. And I'll put my focus there. I'll stay nimble, I'll stay short-term, because I don't want to position myself in an entry that requires a prolonged counter daily trend in order to realize potentially a profit. In other words, I don't want to get into a longer term time frame and expect a more prolonged counter trend move. I can trade counter trend short term, 5, 15, 30. I can trend follow across all the time frames, but I'm going to leave the 60 and the 240 alone when I'm going counter trend. I will not go counter trend on those time frames. What about in a bearish market? Same time frames, right? I want to get short at resistance in a bearish market. By the way, hopefully everybody here knows, I've talked about it so much in the Daily Forex Trading Edge and past webinars, but you all know that, you know, when I talk about support, when I talk about resistance, for the most part, I'm talking about my 34 EMA wave levels coupled with psychological levels, coupled with perhaps those power stats, support and resistance levels, Fibonacci. I brought up some Fibonacci today on the Euro Swissy and the Dollar Swissy update at the Daily Forex Trading Edge. Okay, so support and resistance are often going to be my wave, and you can throw the 20-period SMA in there because that's my aggro swing trading level, my initial level. In fact, the swing trading zone I often refer to is the area in the context of an uptrend that would be between the 20-period simple and the 34 EMA high, and in the context of a downtrend that would be the 20-period simple and the 34 EMA low. Okay? There's a view of both those right there. So again, in a downtrend, what would be counter trend? Getting long, right? So long would be counter trend. I will limit my long positions in an overall directional bias that is bearish, I will limit my counter trend trading, which would be buy long positions, to the 5, the 15, and the 30-minute time frame. Okay? That's where I will limit it. I'll only go short term. 60 and 240, trend following only. Okay? This is time frame selection and directional choices are often where a lot of traders, that's where the wheels fall off the wagon for them. This is a huge and a very simple way, I think, to do it. Because a lot of traders don't step back to look at the bigger picture. You know, so traders, and I'm probably just as guilty of it too. We start getting so close to the intraday movement that we forget to step back and go, oh yeah, you know, when we look at the gyrations on the euro-US dollar, we forget to step back and go, oh yeah, thanks Mr. Euro-US dollar, you're really not going anywhere. You've got no direction. You're running around in circles, essentially. And unless I step back and look at this daily chart, it's hard to appreciate just how confused this pair really is, right? Because when you go intraday, especially short-term intraday, like a lot of traders will do, it just looks like the market's, you know, super trending this way or super trending that way. It's not until you step back to the daily often that you can appreciate the fact that we're not going anywhere. And that's the same situation we're having with the dollar index right now. So directional bias, understanding that daily or overall or dominant, whatever you want to call it, I think it's all three of those things. Your daily is your most significant, so it's going to give your dominant, your overall, your most important, psychologically relevant, whatever you want to call it, psychology of the market. Then I can at least step back and say, yes, I'm counter trend trading or I'm trend following. You know, up until then, what are you basing that opinion on, right? So that is hugely important to setups when you're talking about just simply which time frame you're going to use to enter and exit the market on. Again, this is an aspect of trading that I think that traders often don't ever get a grasp of. It's basic, I know it, and hopefully you realize how simple it is once you start off with that daily and make some choices about counter trend and trend follow trading. Okay. All right. So, Erica, yeah, I would love for someone to bring me a pizza. Absolutely. In fact, there's a place about 15 minutes from my house called Pizza Time. It's my favorite pizza place, and they make something called a grandma pie. Absolutely my favorite. And yeah, I'd probably sell my cat right now for one of those. I'm kidding. I love my cat. And I'm a dog person. But yeah, it'd be nice to have someone bring me some food, no doubt. Well, you know, my mom did come over and bring me some tea. So I can't complain about that. I am sipping on some nice, warm, I have no idea what it's called, tea right now. Knowing my mom, it's probably good for my brain and whatever else. She always finds the good stuff. It actually smells like sweet roses. That's what it smells like. As far as what I look for in announcements, David, I look for a reaction. That's really what I'm looking for. I'm looking for a reaction, 100%. I'm less interested in trying to determine what it means to me, and I'm more interested in how it's being discounted, 100%. Chamomile tea. You know, you're probably right, and it probably would help me sleep because I haven't been doing much of that either. I just can't help but think about the movie Young Guns and whatever tea they had when they were out in the desert when they started hallucinating. Sometimes I think that's what I'm actually sipping on. My cat was talking to me yesterday. So I think when that happens, I'm certainly food and sleep deprived. The food deprivation certainly will not harm me. I've got plenty of stores. But the sleep deprivation, yeah, that could start chipping away at what sanity I have left, right? All right, so the announcements, you know, David, as far as the announcements and their change to longer-term dispositions, I actually think they often do not change longer-term dispositions. I hope we kind of covered that. You know, the Aussie and the Kiwi, I do feel that they're solid trades, but here's the thing. The correction in both of them have been so dramatic. And crude oil, talk about related markets, crude oil can't seem to really get out of its own way. But crude is sitting at about 85.50 right now, which is actually representing a little bit of a pullback from where it was able to get up to. We were actually teetering up against 86 today. Could not make the 86 handle, but we're in the 85 handle, which is impressive because we were in the high 70s, but 2 or 3 sessions ago. So in terms of whether or not I want to really buy into the weakness, or I shouldn't say buy into, whether I really want to buy into it mentally, whether I really want to set up potential shorts in the Kiwi, longer term or not, you know, I had an initial, before all the craziness of this week kind of threw all my potential larger picture ideas out of the window, I actually had a kind of hypothesis, and I talked about it on Daily Trading Edge, where I wondered if the COMDOLs couldn't become possibly a safe haven. And gosh, you can see the meltdown that's happened in the Aussie from its congestion. We can see the reversal in the trend that's happened in the Kiwi. But here's the thing. If crude oil starts to head up higher as the dollar depreciates, and why would the dollar depreciate? We had our Federal Reserve just come out and say that rates are going to stay low till 2013. Talk about throwing your hands up in the air. So if the dollar continues to weaken, that in and of itself could help commodities rally. The only reason commodities have been Donkey Konged for the past week is because of the meltdown in the equities markets. As I wrote in today's, I think it was today's update. I can't remember. I do so many updates. Sometimes I actually lose track of where the hell I post them. This one, I'm thinking of, okay, my Baby Pips update. That's right, my Baby Pips update. You guys can check me out. I'm Queen Cleopatra over there. I did talk about it, and I believe 2,136 points from top to bottom. 2,136 points. So you have the Dow shave 2,000 points, you're definitely going to see commodities take a hit, and I think that's been what's been happening. But if the dollar begins to lose footing, that could push commodities higher, and if equities retrace the upside, that could really push commodities higher, because then you'll have the 1-2 punch of likely a weaker dollar, stronger equities. That usually equals much stronger commodities. Okay, and I talked about that over at my Baby Pips update today, and you can check that out. And by the way, I need to mention that anything I do outside of the Daily Forex Trading Edge or outside of this room, those are not in any way endorsed or anything like that by Interbank FX. It's just the crazy thoughts that come out of my own mind. They're my personal thoughts and all that good stuff. I should mention that. Anywhere else, I write for a number of sites, Baby Pips and ForexStreet.net, Forex Pros. I'm writing for a site called Forex Alliance. I have a lot of all that stuff outside of IBFX and Daily Forex Trading Edge. Again, those are just my personal views. Obviously, my personal website, RagheeHorner.com, 100% my personal views, okay? So I should mention that. All right, so with that being said, I haven't seen the COMDOLs really find the footing. In fact, we bounced from parity in the Aussie a few sessions back, and we bounced from parity in the Canada a few sessions back too. So, maybe we'll revisit that theory hypothesis early next week. I think we're likely to have a pretty flat day tomorrow. That's my guess. I don't know that we're going to do any kind of big rallying or selling off going into the weekend. Although because we did rally up today, that of course logically means that we're going to sell off like the dickens tomorrow, right? I think it's more logical to sell off in front of the weekend than rally. I think perhaps a flat day or a negative day is likely in order. And flat has been something that the equities markets have been incapable of doing, so yes, probably more negative than positive, right? By the way, a negative down day would actually be dollar positive and would push commodities lower again, so we'll see what happens. All right, I've heard some traders say Euro gold is an alternative to Euro US dollar. I haven't traded that, Patricia, so that's interesting, and maybe I'll write something about that in an upcoming Daily Forex Trading Edge update. I probably can't say one way or the other. I haven't traded it, so if I haven't traded it, I hate to speak on it. As far as getting the mini terminal on here, and you know that's one thing I completely neglected to really cover today, but as I mentioned, sometimes it's the markets that dictate what it is we're going to talk about. Mini terminal. Okay, so you go over to your navigator and you scroll down, you open up, you expand your expert advisors drop-down menu, and it's right there, IBFX mini terminal. And you just drag and drop it right on your chart. And what you'll get is a small window with your buy and sell buttons right on there. In fact, you'll even have a little golden button in the upper right-hand corner. And for whatever reason, I don't know if it's because my demo is, I'm on my demo here. This is not my live account. So I apologize, because my live one, I'm turning around looking at my order execution computer, and I can see my mini terminal alive and well over there. So I apologize that it's cantankerous right now, but again, this is a demo. But anyways, what you'll get is a box that will allow you to buy and sell right from your chart, which is really nice. And put in conditional orders. You know, you can have sell limits and buy stops and sell stops and sell limits, all those, if you click on that little golden button on there. And when you activate it, you'll know exactly what I mean. It's in the upper right-hand corner of the pop-up window, or the window that'll be sitting on your chart. Okay, so let's see. You know, as far as a ban on short selling out of Italy and Greece, do we actually get confirmation of that? I don't know that I saw. I did walk out of the office for some time, but do we actually get confirmation of the ban on short selling? I don't know that it matters much on those two countries, to be quite frank. I really don't. I think that you're right. What is it? Turkey? I'm trying to remember. Turkey, Greece, South Korea. They're going to curb it. I don't know what that means. You know, I mean, I'm not 100% sure on what it is that they want to do to prevent the panic selling. I think what they're actually doing, I don't want to call it a ban, okay, because the word ban means they're not allowing it. And from what I understand, that's not the case. I think what they're doing is they're raising your initial margin to short to a high level to prevent large number of short sellers, unless they're well funded to do so. Okay, I think that's what's happening. So don't take me on that, but I really don't factor that in right now as a major. I think there's some other issues that we're dealing with in a bigger way, but it's definitely something to think about. And I don't have all the information, but I believe that's what they're doing. They're just curbing it. The ban, I think the word ban probably isn't appropriate here, I think. Okay. What is insane is that the makers of Angry Birds, the iPhone app, are seeking a $1.2 billion valuation. So, you know, capitalism is alive and well, and it exists on your iPhone 4, apparently. $1.2 billion. Angry Birds. Yes. All right, so let's just keep our heads cool, right? Capitalism is alive and well. And the ruler of that kingdom is Steve Jobs. All right. As far as, let's see. Oh, as far as multiple monitors, Peter asks. Basically, you can expand your platform across multiple monitors if you've got a dual screen card. I actually use a program. There's software that will come with your computer. I think Windows Display will help you handle multiple monitors. And then I also use a program called Ultramon to do so. Ultramon. Ultramon. But I believe Windows 7 has a built-in display capability to help you manage multiple monitors as well. Okay. All right. So, gang, I think we'll wrap it up there for today. I think the market, again, kind of dictated what it is we're going to talk about. I hope that you'll visit me over at Daily Forex Trading Edge, and let's not forget the uber cool new site, IBFX Connect. So whether or not you want to get a hold of me over at Daily Forex Trading Edge with a comment, I know Johnny does it. He left a couple comments. We've had little discussions there. So very cool. If you want to do that, or if you want to join IBFX Connect, which I highly recommend you do, if for no other reason, and you don't have to use your real name, so you can succeed or you can fail however you want. Nobody's going to know it's you. Okay? You can see we have all sorts of very interesting names. Okay? Gila Monster and the Dude. You don't have to use your picture. All right? Please don't use mine. But, you know, doing it for no other reason than for the performance and stats. And just, you know, the community is very cool. All right? Okay, so I will see you all next week. I am pleased as punch that the audio and the video worked for the entire hour. Thanks for hanging out with me for yet again another IBFX Live webinar. And I will see you all next week, yeah? Oh, Chad, real quick, you can put the 50 up there as well. If I was using the 50 and the 200 period simple moving averages, I was probably looking at what's known as a death cross, or there was probably one that was possibly brewing. But the 20, the 50, and the 200 are all good to have. Just over the last few months, I've just been kind of winding it down just to the 20 and the 200. But I do keep an eye on the 50 because of the potential death crosses. So quick answer to your question there. It's not a switch. Just it's where my head's been at. And it was peyote, huh? Okay. Yeah, I don't think my mom knows how to make peyote. She's an Indian, not a Native American Indian, right? So, oh well. All right, guys. Good night.